Welcome back. Today we're uncovering the biggest Bitcoin holders of 2025, exchanges, corporations, countries, and legendary individuals. Ever wondered who controls the world's digital gold? We're breaking down the top wallets and what they mean for the future of crypto. From massive exchange reserves to mysterious old wallets, we'll reveal the key players shaping Bitcoin's landscape this year. Ready to dive in? Let's get started. Let's start with the giant crypto exchanges. The largest Bitcoin wallets on Earth belong to these platforms, holding funds for millions of users. Binance leads the pack, with its main cold wallet securing nearly 250,000 BTC, an unmatched digital vault. Robinhood has surged into the top ranks, reflecting the mainstreaming of crypto investing. Bitfinex, a veteran exchange, also holds a massive reserve, trusted by professional traders worldwide. But it's not just private companies. Governments like the US now control huge wallets, mostly from seized assets. For example, the US government's wallets, filled with confiscated BTC, are among the largest single pools globally. These exchange and government wallets highlight a paradox. While Bitcoin is decentralized, much of it is held in a few centralized vaults. Security is paramount. Multi-signature wallets, distributed hardware, and strict protocols protect these vast reserves. A breach would shake the entire market, so the pressure on these custodians is immense. Most users still prefer the convenience and security of letting exchanges handle their Bitcoin, despite the be-your-own-bank ethos. This centralization is a trade-off for mass adoption. User-friendly custodial solutions are essential for bringing crypto to the mainstream. Ultimately, these exchange wallets are the backbone of the current Bitcoin economy, safeguarding the liquidity and trust of millions. The dream of total self-custody is alive, but for now, the giants hold the keys. As adoption grows, the balance between convenience and decentralization will keep evolving. The question remains, will more users take control, or will the whales get even bigger? For now, the exchanges are the undisputed titans of Bitcoin storage. Now let's talk about corporations making bold moves, putting Bitcoin on their balance sheets. Strategy, formerly MicroStrategy, is the undisputed leader, holding over 200,000 BTC as its primary treasury asset. Michael Saylor's conviction turned a radical idea into a corporate trend. Tesla made headlines with its massive purchase, and while it's trimmed its position, it still holds significant BTC. Block, led by Jack Dorsey, has integrated Bitcoin into its business and treasury, betting on its future as digital money. Even GameStop and medical tech firm Semler Scientific have joined the party, showing this isn't just a tech phenomenon. Internationally, companies like X-One, by 21 Capital in Europe and Metaplanet in Japan are stacking SATs, hedging against inflation and currency risk. These companies are transparent. Public filings reveal exactly how much BTC they hold, unlike anonymous wallets. Their collective holdings represent a powerful new source of demand and a signal to more conservative firms. Corporate adoption is spreading, and each new entrant adds legitimacy to Bitcoin as a store of value. The numbers are staggering, but the trend is clear. More companies are betting on Bitcoin's long-term potential. This wave of adoption is global, not just a US story. As more firms join in, the corporate whale club keeps growing. Will your favorite brand be next? The race is on. The biggest shift in recent years, traditional finance entering crypto through ETFs and trusts. Grayscale's Bitcoin Trust was the original institutional whale, holding over 600,000 BTC at its peak. But the real game changer came in 2024. Spot Bitcoin ETFs were approved in the US, opening the floodgates for Wall Street. BlackRock's iShares Bitcoin Trust, IBIE, quickly became a top holder, with billions pouring in. Other giants, Fidelity, ARK Invest, Bitwise, launched their own ETFs, collectively holding hundreds of thousands of BTC. These products let investors buy Bitcoin exposure through familiar, regulated channels, no wallets or private keys required. Every ETF share bought means more real Bitcoin purchased and held in custody, creating constant buying pressure. This institutional adoption brings legitimacy and capital, but also centralizes custody in a handful of financial giants. For many, it's a trade-off accessibility and security versus the original not your keys, not your coins ethos. Still, ETFs have made Bitcoin mainstream for retirement accounts, advisors, and big money managers. The top 10 ETFs now control a huge slice of the total supply, and that number keeps growing. This new class of whales is reshaping the market, for better or worse. Institutional adoption is here to stay. The question, will it drive further decentralization or just bigger whales? Either way, ETFs are now central to Bitcoin's story. The bridge between Wall Street and crypto is built, and it's busy. The landscape will never be the same. What about entire countries? Governments are now Bitcoin holders too. The US leads not by choice but through massive seizures from cybercrime and darknet markets. These seized coins sit in government wallets for years before being auctioned, making the US a top holder. China is next, with a huge, mostly hidden stash from crackdowns and confiscations despite its official crypto ban. The UK has also accumulated significant BTC through law enforcement actions, but some countries are buying on purpose. Ukraine has received major crypto donations and holds its own reserves. El Salvador made history by adopting Bitcoin as legal tender, with President Bukele publicly buying the dip. Bhutan quietly mined Bitcoin for years, using hydropower, and Georgia is another state with crypto reserves. The list of state-level holders is growing, from strategic adopters to accidental accumulators. The idea of nations holding a decentralized asset is a paradigm shift, one that's just beginning. If more countries join in, it could trigger a global race to accumulate Bitcoin. This game theory scenario could reshape geopolitics and the global financial system. For now, the US, China, and the UK top the list, but new players are emerging fast. National reserves are no longer just gold and dollars. Bitcoin is on the table. The implications are huge. The sovereign whale era has begun. Watch this space. Now, let's meet the legendary individuals, the Bitcoin billionaires and mysterious whales. At the top is Satoshi Nakamoto, Bitcoin's anonymous creator, with an untouched stash of about 1.1 million BTC. These coins have never moved, fueling endless speculation and myth. Next, the Winklevoss twins, early believers who reportedly own a massive share of the supply and built the Gemini exchange. Tim Draper, the venture capitalist, famously bought nearly 30,000 BTC at a government auction and has held strong ever since. Michael Saylor, beyond his company's holdings, is a major personal whale and a vocal Bitcoin evangelist. But many of the biggest wallets are mysteries. Early miners, anonymous OGs, and silent giants whose moves are closely watched. Blockchain analysts track these dormant wallets, and any sudden activity sparks market-wide buzz. Some famous addresses, like the 1fex56b wallet, turned out to be government-controlled, but many remain unidentified. The world of individual whales is a mix of public legends and hidden fortunes. Their influence is real. One move can shake the market. The intrigue of anonymous wealth is part of Bitcoin's enduring appeal. It's a modern treasure hunt, with fortunes built on vision, risk, and sometimes pure luck. The landscape is always shifting as new legends are born and old wallets awaken. In Bitcoin, the line between myth and reality is always blurred. The richest individuals are both known and unknown. That's what makes this world so compelling. So, is all the Bitcoin really in a few hands? Not quite. The top 100 wallets, mostly exchanges and institutions, do control a big chunk, but the story is more nuanced. The fastest-growing segment is wallets holding 100 to 1,000 BTC, smaller institutions, family offices, and high-net-worth individuals. This middle class of Bitcoin is expanding, spreading ownership beyond just the mega whales. More addresses than ever now hold at least one full Bitcoin, showing steady grassroots accumulation. ETFs and custodians centralize some ownership, but the overall trend is toward broader distribution. The ecosystem is maturing, with more participants at every level. Decentralization is happening, slowly but surely. The ownership pie is getting sliced into more pieces. Critics focus on concentration, but the real story is diversification. Bitcoin's mission of spreading financial power is making progress. It's not overnight, but it's real. The future is more distributed than ever. What a journey! We've explored the vaults of exchanges, bold corporate bets, ETF giants, national reserves, and legendary individuals. Bitcoin ownership in 2025 is still concentrated, but the trend is toward wider global participation. Who will be the next big whale? A tech giant, a bank, or a new country? Let us know your predictions in the comments. Thanks for watching. Don't forget to like, subscribe, and join us for the next deep dive into the world of crypto.